Good afternoon. It is Sunday, August 31st, 2025. I'm going to go through some of the things in this video and videos going forward which make HGSI a unique piece of software. I've been thinking about this quite a bit. There's a lot of software packages out there, as you know. They all have their advantages and disadvantages. HGSI is unique in a lot of ways, and I'm going to point that out. The August add-on is updated next month. I'll have a September add-on, or since we're at the 31st, next week it'll be a September add-on. So I'm calling this Markets Through the Lens of HGS Investor. It's been around for 25 years now, something like that, and when it started out, it was just a really basic piece of software for organizing industry groups, and it's evolved so much since then. It's got so much power that I really don't emphasize enough or utilize enough myself, and I'm going to try to point that out going forward. As always, any stock index or ETF mentioned in this presentation is not a recommendation to buy or sell. All trading strategies are used at your own risk. I'm going to begin here. This is a PDF file that's available through HGSI, and this information is all in your help file, but this is a standalone PDF, and I'll put a link in for Insider Club members that may or may not have this. But this was done several years ago when Matt put a VPA in the software. Now, originally, when I suggested VPA, and it's really not VPA, that stands for volume price analysis. It's really volume spread analysis, and you'll see that as I show charts and so on. Anna Calling claims that she came up with VPA, but VPA means nothing. Yes, it means volume price analysis, but the spread is what really tells you what's going on when you combine the spread with the volume and the A for analysis. If you look down here at acknowledgments, this was popularized by Richard Wyckoff and Jesse Livermore. We've all heard of them, but Tom Williams was really the first person that tried to computerize or hire programmers to computerize volume spread analysis. And he referred to it as VSA, and I'm going to be referring to it primarily as VSA. Now, Karthik Marar, who coded Amory Broker, he used the term VPA, but he also acknowledges that it can be called either one. Now, this is Anna's book. She refers to it as VPA, and it's really confusing. I wish she hadn't done that, but she also looks at it from the market maker perspective rather than from the trader's perspective. I think she just wanted to be unique, so she made those changes. So just keep that in mind if you read her book. Her book is excellent, but it's confusing as far as telling the two apart. That is VPA and VSA. See, here's a VPA flag, VPA signal. And down here, you can see that VPA is used. When you think VPA, just think VSA, volume spread analysis. And you'll see that as I do these videos. That's what I refer to. Anyway, this document is available, and I'm not going to go through all of it, but you should, if you're interested in the VSA, you should download this, or at least go into the help file and type in VPA. Once again, confusing, but it will come up and you can learn what all of these different signals are and what the requirements are. Now, after the coding was put into the program, let me get this out of here. I asked Matt if he could code in these Wyckoff indicators. The volume, you can see VPA, it says VPA spread here, not VPA. Well, it says both, VPA and spread. Anyway, so that's less confusing because the word spread is used. Now, I hope I haven't totally confused you. Just think of volume, spread, and close. So should this be volume, spread, and close? It's a little bit confusing, but you understand what I mean. We're going to just concentrate on the volume, the spread of the individual bar, and the closing price. And that's the information that we need to really start making informed decisions. Now, I have tried to pretty much standardize on the basics of these warehouse views with the Wyckoff indicators, the volume, the spread, and the close here on the left side, and then the information about the days since the 3 crossed the 6, up or down, and the volume point of control 10-10 crossover up or down. And by looking at these columns right here, I can tell if these are fresh signals, like right here, a 0 is a fresh signal to the downside on the semiconductor, the SOX, and also on the days since the crossover. So the crossover is still fine on the, let me bring this up here. On the VPOC, or the volume point of control, you see it didn't turn red yet, but on the 3 crossing down through the 6, if you look down here at this histogram on this chart, you can see it went from positive to negative. So this is a fresh signal, but I don't have to look at the histogram to know that. I can look right here and see it in this column. But the force wasn't great enough to make the volume point of control turn negative. Now this is the days since the 6 crossed the 18, which is the short-term trend. The other trend, 3 crossing the 6, is what's known as a micro trend, and this is the short-term trend. So looking at this, I can tell that all of these major markets plus, the short-term trend is still up, with the exception of the utility average, and that crossed down 5 days ago, with the 3 going below the 6. The VPOC turned negative 5 days ago, and the intermediate term turned negative 2 days ago. So just bring this up, and you can see that the 3 crossed down back here, and the VPOC crossed right here. It looks like this may have, it did. It ticked up one day, and then they both ticked down again. But all this information is available just by looking at this warehouse view. So overall, the market still looks strong if we just look at the short-term trends. But why did the utilities turn negative? Well, I'm sure it has something to do with interest rates supposedly coming down, but we'll see if that happens or not. But anyway, you get a really nice picture here just going across here. Here's the relative strength. Some of these have no relative strength because they don't have volume. Here's accumulation, percentage price, or the price change one day and the percentage price another day. Here's their closing range, the price since the beginning of the week, and I'm doing this on a weekend. So this is how they fared from Monday morning until Friday's close. Percent price change 5 days is Friday's close to Friday's close. Then here's 21 days for the quarter and since the beginning of the year. And you can see these indexes have all performed well since the beginning of the year. Here's the percent close to the 52-week high. You can see which ones are up near the top. The NYA is, the Dow, the spiders. That's only off 0.7% from the 52-week high. Here's the gain from the 52-week low when the market sold off during the market manipulation period. And then here's the percent volume to the 90-day moving average volume, if there is volume. If the zeros are in here, there's no volume for that index. Now what I've done here is I've tiled you can tile the ranking and the warehouse. The warehouse will drop down to the lower part of the window and the ranking will be on top, and you can use multiple ranking methods. Now I happen to have this set on Wilder RSI, or Wilder Relative Strength. I've found that it will put the strongest indexes or stocks, whatever you're looking at the top of the list, and they'll get progressively weaker as you go down. So let's look at the NASDAQ Composite ETF, the 1-0, and I'll click through to it, and you can see where it is based upon the combo last week. I wasn't sort of raw combo, but I am now. It's down at number 15, but it's number 2 in the ranking module. And if I bring up the chart, you can see that it's a very strong chart. Now if I go down to the transportation average, this is this chart out of these major market plus this grouping. Strongest is always on top, weakest is on the bottom. So let's compare X, which I rarely look at, but look how strong this chart is compared to the transportation average. Still in an uptrend, but nothing like the AMX or the NASDAQ Composite. Remember my settings, which are right here, Wilder RSI. You can also do percent change or comparative RS to any security you want to, but I usually just leave it on this because I want to know which are the strongest charts immediately, and that's a good way to do it. Now I'm going to bring the AMEX back up again, and I'm just going to move this over here, and let's look at this information. Now on Friday, the VPA volume was less than average. You can see that it's up here. The VPA spread was below average. By the way, the definitions are all in that PDF file that I referred to, or in your help file. And the close is in the mid. That information's right here. Now if I go back to this point, click on this, it tells me the volume was less than average on that day with the effort to rise. So make sure I'm in the right spot. But the spread was wide and the close was very high and the sentiment was bullish. You can see that the 3 was below the 6. Now, where did that happen? 3 below the 6, 7 days ago. 1, 2, 3, 4, 5, 6, 7. Right here, 0 is the crossover day, so you can see the histogram 1 week bar here, but it built momentum as it was going up. Now let's take a look at this. Where are we? We're 0.4% off the 52-week high. So the 52-week high is at the top of that candle. These crossover days are very valuable because you can tell where there is a change of character. Before this was negative right here, and then you can see the money flow starting to come in as the 3 crossed the 6. And let's take a look down here. I'll put a crosshair on. The VPOC turned positive the day before, it looked like, and then it followed through. So that's why I have set up the warehouse views with all that information. I can tell how old the signals are, or how new they are, and how strong they are by looking at the 6, since the 6 crossed the 18. Look at this, the Amex, that happened 89 days ago. These all down here happened 88 days ago. This is the days since VPOC crossed. Look how long this S&P 500 has been Well, no, that's wrong. I'm sorry. Well, that's if there's no volume, you're going to get a number like this. So just disregard anything that says 788. Okay, I'm going to move to another group of stocks, and that's another great thing about HGSI. You can have as many groups in here as you want to. You can arrange them any way you want to. So I'm going to move up to what I call my Market Insight ETFs. This is a cross-section of ETFs that I put together just so I could get a good feel for what's going on in the market. So I'll click through to the warehouse view, then I'll click through to the ranking view, and remember I'm on Wilder RSI 14 weeks here, and down here I'm sorted on the percentage price change. So you can see the UltraVix short-term futures pop to the top on Friday, but notice that the days down is still, well, it's at 18 days now, and the volume point of control did not turn up either. So I can also see, looking down here, that here is a fresh signal on U.S. natural gas. If I click through to the ranking module, it's clear down here at number 31. That tells me immediately that this is a weak chart. But let's just bring it up and see. So 0, 2 days ago, right here, it crossed over, and the volume point of control and the force index also crossed over. So the trend is clearly down, except for the micro trend, because the 3 has gone above the 6, and it gained some momentum on Friday. Now, it could be because we're getting into the fall season, and natural gas will more than likely go up. But just by looking here, I can see that something has changed about the character of this ETF. Now I'm going to go down to number 4, gold. I'm going to click through to the ranking module. It's still set on 14 weeks. You would think it would be higher with all the money that's flowed into gold, but let's look at it. You can see it's really been a choppy market. Let's compare it to the metals and mining. Look how much stronger this chart is just by using this Wilder relative strength. This is a much stronger chart. I'll zoom out on this so you can see it better. Now let's go back to the gold. Look at this. It's just chop, chop, chop. So this is why I like to use Wilder RSI. Get a quick read on where the strength is. Let's look at the technology sector. Strong chart. If we click through to the warehouse, it's down here at the bottom, down 1.5% today, or 4.09. Okay, let's bring that chart up again, and let's look across here. It says the volume was high, the spread was above average and down. I'll zoom in. Volume was high, whoops. Spread was above average and down. The sentiment went to bearish. It was bullish the day before. 1 day transition. You can see volume spiked up. So we have volume, we have spread, and then we have the close. So where does the analysis come in? Well, you look at the spread, you see how much volume there was, quite a bit. We see that there is a effort to fall, which is a bearish sign, but there was some buying at the end of the day. You can tell that by looking at the wick. Now, Tuesday's going to tell us a lot more about this ETF, if it's going to follow through, but you do see some buying in here, support back to here, and if it continues, right now it looks very bearish, but you know how the dip buyers are. Look right here, and always look to the left. See what happened to the left. Also, if you look down here at the 3.6, it is still positive, but the VPOC and the force index turned negative. So it's a little bit confusing. We're just going to have to wait to see what happened. But I analyzed this bar by looking at the range of the bar, where it closed, and if you look over here, you'll see that the range is 24.43%. So that tells me it's about a quarter of the way back up from the low point of the day. So this tells me that if we use the term volume price analysis, price means nothing. That's why we have to use the term spread. And you can see the term spread is used in the chart rather than price. So volume, spread, close is down. That's where the analysis comes in. Now I'm going to go back over here. I'm going to sort on days since. You can see these are the longest running ETFs here. There'd be 14 days, 13 days, and so on. What are the fresh ones? Here's the TLT, the 20-year Treasury bond ETF. You can see it turned negative on Friday. Let's get up. Now this is a choppy chart. You have to be careful, of course. If you look at the chart, you can see it's really a trendless market. It's kind of all over the place. So I'm going to click through to the ranking module. You can see it's down here. Not a very strong chart. Metals and mining, technology, NASDAQ composite ETF, semiconductors. That's where the strength has been. So on Tuesday, I'm going to see what happens, see if we get some follow through to the downside. But we're getting a warning shot here on this 0-day crossover. Now I'm going to end this. I still don't have my voice back completely, and I just wanted to get started on this. But going forward, I'm going to emphasize what makes HGSI different. There are better charting programs out there, I know that, but I get insight from this program that I don't get anywhere else. And yes, it's in a way having to download and update. It takes time, but it's worth it because everything's on your computer. If you have a laptop, you just pick it up and go. And all these calculations are being done during that update process. So this is why it takes so long. And also I've got a lot of groups in here. If I got rid of all these groups, it would update much faster. But I use them, so I just live with it. And I assume the Insider Club members do too. Thank you for listening, and have a good rest of the weekend.